Welcome to Educare with some more important questions, MCQs. The first one is from inheritance tax topic and it checks your knowledge of exemptions. On 1st July 21, Samir made a cash gift of 2500 to his sister. On 1st May 22, he made a cash gift of 2000 to a friend. And on 1st June 2022, he made a cash gift of 50,000 to a trust. Samir has not made any other lifetime gifts. In respect of Samir's cash gift of 50,000 to a trust, what is the lifetime transfer of value for inheritance tax purpose after taking account of all available exemptions? So number 1, the gift date is 1st July 21. So the tax year is 21-22 and as you know, the annual exemption amount is 3,000. 2,500 of annual exemption of current year has been utilized and remaining unused is 500. The date of second gift is 1st May 2022. He made a cash gift of 2,000. So the tax year is 22-23. So annual exemption amount is 3,000. So 2,000 out of it will be utilized and nothing is chargeable. The third gift is for a trust on 1st June 2022. Again the tax year is 22-23. Amount of gift is 50,000. Out of this 50,000, 1,000 of remaining unused annual exemption of current year will be utilized and it will reduce the value transfer of value. And also previous year's unused annual exemption of 500 will also be used. So by subtracting this 500, the remaining amount will be 48,500. So that is the transfer of value. Now the next question, again an important one. On 31st March 23, Angus sold a house which he had bought on 31st March 2009. Angus occupied the house as his main residence until 31st March 14 when he left for employment abroad. You know that main residence private residence relief is allowed. Angus returned to the UK on 1st April 16 and lived in the house until 31st March 17 when he bought a flat in a neighbouring town which he became his main residence. What is Angus' total number of qualifying months of occupation for private residence relief on the sale of house? So first the date of purchase is 31st March 2009. Then from 31st March 2009 to 2014, this is a period of 5 years, means 60 months. These 60 months are said to be qualifying period. Then he went abroad and for a period of 2 years from 31st March 16 to 31st March 14 to 1st April 16. So any period he lived abroad due to employment is said to be deemed to be the occupied period. And then from 1st April 16 to 31st March 17, one more year he lives in a flat. So this is the period of 12 months. This is actually period of 24 and 12. So total period is said to be 96 months. So mostly students consider this is the answer, but they forget that last 9-month period is always said to be deemed occupied period. And for this, there is no condition that there should be an actual occupation before and after that particular period. So that 9 months period of last 9 months period would be added to this and the answer is 105 months. So mostly student not consider this 9-month period, so that is why their answer get wrong. So remember that rule that last 9-month period is always considered to be deemed occupied period. so it will be included. So the next question, Abina has made the following gross contribution to her personal pension scheme over the past 3 tax years. So this is 42,000, 27,000 and 28,000. What is the maximum gross contribution which Abina can make to her personal pension scheme for the tax year 22-23 without giving rise to annual allowance charge? So as we know that the limit of annual allowance is 40,000, and as in the year 1920 he made a contribution of 42,000, so there is no unused allowance. For the year 2019-20 there is no unused allowance. In the year 2021 he made a contribution of 27,000. The limit is 40,000, so 13,000 of unused allowance related to tax year 2021. And for the third year 21-22, this is the unused allowance, that is 12,000. 40,000 is the annual limit and 28,000 has been utilized, so unused allowance is 12,000. So they are asking about 22-23. Current year allowance is 40,000 plus we can brought forward previous 3 years unused annual allowance, and in these previous 2 years the annual allowance is 13,000 plus 12,000, this is 25,000. So total it is 65,000. So this is the amount without giving rise to annual allowance charge. Next question is, Triangle Limited is registered for value added tax and uses the annual accounting scheme. For the year ended 31st December 2022, the net VAT payable by Triangle is 73,500 for the year ended 31st December 2022. And for the year ended 31st December 21, the net VAT payable is 47,700. Indicate by clicking the relevant boxes in the table below the number and the amount of monthly payment on account of VAT which Triangle Limited must make in respect of the year ended 31st December 2022 prior to submitting its VAT return for that year. So it requires your knowledge of rules that there are number of 9 monthly payments and the monthly payment is for the previous year's 1/10 part. So previous year's net VAT payable is 47,700 divided by 10 will give you an amount of 4770. Next question is, Lilly Limited commenced trading on 1st January 2022. The company incurred the following expenditure prior to 1st January 2022. This is initial market research into competitors, entertaining potential customers and supplier, and donation to local school fair in exchange for advertisement. What is the amount Lilly Limited deductible pre-trading expenditure in respect of year ended 31st December 2022. So the expenses which are allowed to be pre-trading expenditure are research into competitor and donation to local school fair in exchange for advertisement. So the total amount of 14,000 is said to be pre-trading expenditures. Next question, Paloma has been trading for a number of years. Her tax adjusted trading profit for the year ended 31st May 2022 was 53,150. And for the year ended 31st May 23, it was 50,350. What is the amount of class 4 NIC contribution payable by Paloma for the tax year 22-23? So this is the question in which we have to recognize about the tax year 22-23 for which we have to calculate the NIC contribution. Remember that the year ended on 31st May 22 lies in a tax year 22-23. So we have to consider the income of 53,150 as per rule. The amount of 50,270 minus 12,570. This is the amount on which we have to contribute at the rate of 10.25%, and for the above income 53,150 minus 50,270 at the rate of 3.25 percentage. So this will be simple question, only they are checking your understanding about the year to choose, and this will be 50,270 minus 12,570, and 10.25% of this would be 50,270 minus 12,570. So it is 3,864, and then 53,170 minus 50,270, and 3.25% of this will be 94. So in total it would be 8 and 593. So it is approximately 3958. So D will be your answer. The next question, identify by clicking on the relevant boxes in the table below whether the following statement are true and false. So simple, your knowledge. Corporation tax is a direct tax on the turnover of companies. It is direct tax, but it is not on turnover, so it is false. National insurance is a direct tax suffered by employees, employer and the self-employed on earnings, so it is true. Inheritance tax is a direct tax, right? On a transfer of income, no, it is on assets, so it is false again. And fourth one, value added tax is a direct tax, so that is wrong, it is an indirect tax. So again, next question, which of the following statement concerning self-assessment tax return for individual is true? Individual with a tax payable of less than 1,000 for a tax year are not required to file a tax return, not true. And then individual are only required to file a tax return for a tax year if they receive a notice to deliver from HMRC, no, they can submit this themselves. All individuals who submit a tax return on time are able to have their tax payable calculated by HMRC. Absolutely right. All individuals who submit their tax return on time, their tax payable is to be calculated by HMRC. The tax return for an individual cover income tax, class 1, class 2, class 4, NIC and capital gain tax liabilities. So this is also not true. Next question is, in certain circumstances an individual is automatically non-resident in UK. Indicate by clicking on the relevant boxes whether the following two individuals satisfy or do not satisfy the test to be treated as automatically non-resident in the UK for the tax year 22-23. Eric, who has never previously been resident in the UK, in the tax year 22-23, he was in UK for 40 days. And Fran, who was resident in the UK for the 2 tax years prior to the tax year 22-23, in the tax year 22-23, she was in the UK for 18 days. So it is first that satisfy and second does not satisfy, because the limit is here 16 days. If any person lives less than 16 days, then he is considered to be automatically non-resident person. Max is employed by Star Limited on 6th April 21. Star Limited provided Max with a camera for his personal use. The camera had a market value of 2000 on 6th April 21. On 6th April 22, Star gave the camera to Max for free. The camera had a market value of 1400 on 6th April 22. What is Max taxable benefit in respect of camera for the tax year 22-23? So at the date of gift, we have to consider two values, 1400, the market value at the date of gift, and the remaining value. In the previous year, when the asset was provided to individual, it has a value of 2000. And in the previous year, from 6th April 21 to 22, the asset has been used for 1 year by the employee. So for this 1 year, 20% of cost of asset is included in his benefit. So the remaining value at the time of gift is 1600. So we have to consider these two values, whichever is higher is said to be the taxable benefit. Remember the rule, we have to consider the market value, and if that asset has been previously provided for use for employee, then whatever amount already included in his taxable income should be deducted from the original value. Cora made a cash gift of 3 lakh to her niece on 30th April 17. She then made a cash gift of 5 lakh to her nephew on 31st May 18. Both of these amounts are stated after deducting available exemption, means you don't have to deduct the exemptions. Cora subsequently died on 31st October 2022. What amount of inheritance tax was payable as a result of Cora's death in respect of the cash gift of 5 lakh to her nephew? So here we need to consider what is the amount of nil red band that has already been used. So nil red band is 3,25,000. Out of this, 3 lakh of nil red band has been utilized in the first gift. So remaining nil red band available is only 25,000. So from the second gift of 5 lakh, first we have to deduct that 25,000 of nil red band. Now this is 4,75,000. Then we have to calculate 40%, because on the date of death the tax rate is 40%. So this 40% would be 1,90,000. So 1,90,000 is the amount of tax. Now we have to consider the time period between the last gift and date of death. So it is a period of 19, 20, 21, 22, and then it is period between 4 to 5 years. So if the date of gift, from date of gift to date of death, if the period is between 4 to 5 years, there is a 40% concession is given, and 40% of 1,19,000 would be, this is the concession, 76,000. So remaining amount of tax that is to be paid is 1,14,000, right? So first we have to consider what is the available nil red band, then we have to consider the tax, and then we have to consider about the concession taper allowance. Next is Rajesh is a sole trader. He correctly calculated the self-assessment payment on account for the tax year 22-23 and paid these on due date. Rajesh paid the correct balancing payment of 1200 for the tax year 22-23 on 30th June 24. Indicate by clicking on the relevant boxes on the table below what penalty and interest Rajesh may be charged as a result of late balancing payment. So first it is penalty. Penalty would be amount that is not paid, 5% of this amount, and this will be 60. And second is it is about interest. Amount is paid on 30th June 24. So from 31st January to 30th June, this is a period of February, March, April, May, June, 5 months period. Interest would be charged. So 1200 multiplied by 3.25 percentage multiplied by 5 by 12. So this is the 1200 into 3.25 multiplied by 5 divided by 12. This is 16.25. So 16 is the answer. Next question. Oblong Limited has the following results: trading profit, property business income, and qualifying charitable donation. If Oblong Limited makes a claim to relieve the trading losses of 1,02,800 for the year ended 31st March 23 against total profit for the year ended 31st March 22, how much of this loss will remain unrelieved? So first we have to deduct the current year property business income 10,100, and then 79,400 and 6,800 of previous year total profit, and the remaining would be the result. This is 1,02,800 minus 10,100 minus 79,400 minus 6,800. So it is the amount of 6,500. So if a block makes a claim to relieve the trading loss of 1,02,800, first it will set up the current year property income and then previous year total profit. Then we have a question: putting an asset into joint names with a spouse or a partner in a registered civil partnership prior to the asset's disposal can be sensible capital gain tax planning, right? Which of the following cannot be achieved as a direct result of using this type of tax planning? Making the best use of annual exempt amount, absolutely right. Deferring the CGT due date, no, it cannot defer the CGT due date. Reducing the amount of CGT payable, right. Making the best use of capital losses, right. And this one, Eva's income tax liability and class 4 NIC contribution for the tax year 2022-23 are 4840. Her income tax liability and class 4 NIC for the tax year 21-22 were 6360. What is the lowest amount to which Eva could make a claim to reduce each of her payment on account for the tax year 22-23 without being charged interest? You can reduce your payment on account if your current year income is tax liability is less than previous year. So as our current year income tax liability and NIC is less than previous year, we can claim, and claim is for half of this amount 4840, as we have to make two payment on account of equal amount. So the total amount that is to be paid is 4,840 and half of this would be 2,420.